Joining us now is Greta Wall, the host of Wall to Wall and the chief economic correspondent here at One America News. So, Greta, I mean, broadly, I think people generally kind of know why this is happening. There's a pandemic going across the world. But can you really help us kind of break it down and kind of get into the details of why that the markets are failing right now amid this type of response?
Well, Wall Street is looking at the economic impact of the coronavirus outbreak and saying that they believe it's going to be worse than previously expected. That particularly comes from things like all of the cancellations that we're seeing of events here in the U.S., the NBA suspending their season, MLB now suspending spring training. All of these kinds of things obviously have an impact on the U.S. economy. There's vendors that participate in all of these events. Coachella getting postponed, not happening in April, not happening in October. That pushes the money that would be made at Coachella further down into the third quarter instead of happening in the second quarter of the year. So when Wall Street investors are looking at how is this going to impact the economy, of course, there's the uncertainty over the viral outbreak, but then there's also these types of responses that, ultimately do hurt the economy in the short term. Even if in the long term we have a recovery and we bounce back from this, in the short term, you're losing a lot of money in the U.S. economy by these cancellations. And then, of course, President Trump's travel ban on Europe will impact the economy, tourism, the airline industry, all of that impacted. So, Wall Street's looking at all this uncertainty, not really knowing where to go from here.
No, and it's one of those things, too, whenever we're in a situation like this, one of the first places to look at, for example, is restaurants. People start eating out less when they have less money in their wallets.
Yeah, and the services industry, importantly here in the U.S., has been really the strong part of the economy, leading economic growth as manufacturing kind of faltered throughout 2019 as manufacturing slowed. Services really picked up, and service industry will be heavily impacted by this outbreak. As you mentioned, restaurants, that type of industry will definitely suffer amid the outbreak.
Yeah, I mean, it's just kind of common sense. You kind of think of if you were to be scared about getting infected or something, what would be the first thing that you would cut out of your life? I think that is kind of representative of the bigger picture. And a lot of people are getting kind of scared right now. They kind of look at what happened back in 2008. There's been a lot of comparisons to 2008, but you and I have talked a little bit before saying that those comparisons aren't exactly accurate. Can you explain that for us?
Well, you have to look at it in the terms of what's happening in the U.S. economy right now. So 2008 was prompted by the housing crisis and a crumbling of the U.S. economy. Fundamentals here were bad, and that pushed the crash in 2008. What we're seeing right now is, definitely a crash. We're in bear market territory. Bull market turned 11 on Monday and crashed quickly into a bear market here by Thursday. But what you're seeing is not pushed by the fundamentals of the U.S. economy. This is being pushed by a viral outbreak and the economic impact of that viral outbreak. It gives you a scenario, though, for a really quick bounce back once that outbreak is over, once the investors can see what is the long-term impact on companies of this outbreak. Investors will be looking at first quarter results really closely to see how the outbreak impacted first quarter results, and then how companies are forecasting that the outbreak will hurt their second quarter, and then, of course, their full year forecast for profits and revenues. So all of that is what investors are looking at, and this is just it's just not happening because the economy here is bad. It's happening because, the virus can impact the economy and economic activity here in the U.S. and also all around the world, but not anything based on fundamentals of the U.S. economy right now.
And we've kind of seen how investors will respond to the different government responses. There was a point last week where, of course, the stocks really dropped. The president made a certain type of announcement, kind of giving clarity about what he's going to do moving forward. And we did see a little bit of a rebound. Yeah. But then, of course, last night, once again, we saw another drop. So what should we be looking out to come out next?
Well, you see the drop last night because President Trump is, focusing on the health and safety of Americans over the stock market, And so, of course, it does hurt the stock market when investors think about closing travel from Europe here to the U.S. That closes off a ton of tourists and money that comes from the tourism industry, and then of course hurts airlines. And then today you see a move from the Fed to pump that money into the financial markets to try to soften some of this blow that we're seeing here on Wall Street. Wall Street did recover from some of their losses earlier today, but then dropping here further into the close. The Fed, though, announced that they are going to do what are called repo operations. So they're expanding their repo operations. Now, in layman's term, what a repo operation is for the Fed is they're buying, security backed, they're buying collateral-backed securities from smaller banks, so things like mortgages and stuff like that. They're buying those from them to give them cash in the short term. They're doing a $500 billion 3-month repo, $500 billion 1-month repo, $45 billion overnight repo, or $175 billion overnight repo rather, and $45 billion 2-week repo. And the timeline on that is how long a bank has to pay the Fed back when they buy that security from them. And then they're also expanding what they're purchasing in Treasury bills. They're going to buy some longer-term bills than they do currently. This is all an expansion of the Fed's balance sheet, which we've heard President Trump call for as he calls on them to lower rates, expand their balance sheet, saying they tighten too fast. Fed meets next week. They're really widely expected to lower rates, possibly to 0% next week, as they do look to, lessen the impact of this outbreak here on the U.S. economy.
Yeah, I mean, there's a lot of moving parts. A lot could happen, especially over the next week. For all of our viewers, you can catch up with Greta at her show Wall to Wall. She breaks down the finances, the markets every single day. It really gives guidance in these difficult times. Greta, thank you very much for joining us tonight.
Thank you, Alex.